Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you're all having an amazing day today. The market saw a brutal 24 hours with over $1.3 billion in total liquidations, dropping all the way down from that $80,000 level down to 74K. Then seeing a short-term bounce back to retest 80,000 as a consequence of some false news pushed by some American media channels in relation to pauses in tariffs, and this has later been confirmed to be false news by the president, resulting in now some uneasy conditions moving into CPI. We're going to be discussing both the short-term price action in immense detail, going over exactly what is happening here on the 4-hourly and even breaking it down to the 1-hour chart. We'll also be taking a look at 3 key indicators: the 50 EMA, the Gaussian channel, and of course the Ichimoku cloud on the weekly and the 3-day charts, discussing how the price action is developing, what you should be expecting next, and what are the critical levels we need to be paying attention to. Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, you can also join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in taking your trading to the next level, join us in VIP, click the pinned comment, contact our admin by clicking this name, check out a 10-minute video showing you inside the VIP channel, or check out a 51+ month trading track record. You'll get access to 2 channels, the main VIP channel and the exclusive group chat. We'll love to see you in there. Let's dive into the content. So as we can see, over the past 24 hours, we had some absolutely insane volatility as Bitcoin broke that 81.5K support, resulting in a cataclysmic correction, a very large crash, as we told you guys we were expecting, which amounted to be around about 8% down to 74,000. Since we retested 74,000 and established a local low, we had seen a little bit of a rally toward the upside, now retesting what was once prior support as a level of resistance. This is going to be a critical point of which rejections could develop from, and we're going to be discussing that in today's video. We are also taking a look, like we mentioned, at the weekly charts, going over the key levels, the 50 EMA, the Gaussian channel, and much more. Taking a look at what has happened over the past 24 hours in terms of news, we did see this statement come out by CNBC, of course CNBC, and I think it was CNN, I'm not entirely sure on the American news channels, discussed the potential for a 90 days pause on tariffs. This was later confirmed to actually be fake news, which is very ironic because it is usually the media channels going on and yapping on about how fake news is the problem, actually being the ones that are portraying most of the fake news, which I do find hilarious. But yet again, we have seen another instance of, I guess, false news spreading into the market, causing some short-term volatility, which resulted in this 1-hour candle spiking all the way back up to around 81,000 before, again, just dropping back down. So very interesting. If you're wondering why we saw that, it was likely due to that fake news release. Let's move over to the market data. 24-hour volume is up 74% at 480 billion, again expected, with liquidations jumping to 995 million currently. That is 635 million coming from longs and 360 million coming from shorts, up 20% over the last 24 hours. The DXY has bounced, still holding above the 200 moving average, watching very close over here, not really expecting too much in terms of directional moves towards these lows or these highs until either that 50 or that 200 is able to break and sustain below. The S&P 500 has bounced just shy of that 2021 high. We were expecting a continuation into this range. It does look like we got very close. We have bounced just shy of that level. Looking at our current levels, the prior supports become current resistance. So this 5,300 level is now going to be a critical level of resistance where we could see rejections develop from for continuations into that 200. If we break above 5,300, that is going to be a very good sign that this may be the local bottom. So overall, the overall trend is definitely still bearish. We have completed, I would say, the majority of this correction out, at least into that 2021 high. And now we are playing, I guess, a level by level basis. Moving over to Bitcoin, guys, we have so much to be taking a look at, so I'm not going to use too much more time in the intro. Let's just go ahead and jump into it. Before we do, really quickly, if you're interested in supporting the content even more and supporting yourself, you can sign up to BitGet, BitUnix, or BingX with the links down below. You get a lifetime trading fee discount of 15%, which can build up to 45%. And of course, you'll support the content and yourself. We'll play a quick ad and we'll jump straight into the content. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and jump into it. So taking a look at the price action, as you know, in yesterday's video, we had the weekly candle close. Now, the weekly candle close itself was net bearish, but we were still able to hold above some very important levels, which still gives the bulls a little glimmer of hope. And those important levels were the 50 EMA and the Gaussian channel weekly upper band. As we can see, the negative here is we did break below that 44.62 on the RSI, which was a trigger for a correction under 80,000, which we did see. So the 44.62 breakdown triggered this correction, which was around an 8% drop, perfectly predicting that move and getting us ahead of the curve over there, which was good to see. But in terms of macro direction here, in terms of if we are going to see continuations into that $55,000 region, we're going to have to drop below that weekly Gaussian channel upper band and that 50 EMA. So let's take a look at those two levels now. As we can see, guys, the 50 EMA has been a level of relative support now ever since around about September 2023, officially breaking above that level back here in March 2023 upon the break into the Gaussian channel lower band. We sustained above the midline of the Gaussian channel and that 50 EMA through the periods of around 8 months during that consolidation from February on to October 2023, as well as sustaining above the 44.62 on the RSI. From that breakout of the RSI downtrend representing a positive momentum shift, we saw an expansionary move upwards into our March high, where we remained above the 50 EMA the entire time, only coming back down to retest that level once in September 2024, again where we had the retest on the 44.62 on the RSI, then repeating the same pattern with the positive momentum shift resulting in an expansionary move. What we can see here is we have come back down to retest the 50 EMA, as we had done in prior instances. The only difference this time around is that we are actually underneath the 44.62 on the RSI. So this is going to be a pretty bad sign. It increases the probability that this level will not sustain on the weekly chart. Nevertheless, to confirm a breakdown, we have 6 days remaining on this chart for the weekly candle close. So provided Bitcoin can sustain above this level for the next 6 days, there is a potential we do see deviation on the RSI and a breakout on the RSI resulting in the continuation back up to 89,000. That isn't the likely scenario, but it is a potential. But if we do not sustain above here on the weekly, that will confirm now not only the loss of the weekly 50 EMA, which we have just shown you to be a level of historical significance in terms of the strength of the trend, but of course, we will be breaking below the weekly upper band on the Gaussian channel. Now, to show you the weekly upper band of the Gaussian channel, we are going to move over to a macro chart here. We're going to use this chart here and bring up the Gaussian channel. We'll come back and talk about the Ichimoku cloud in just 1 second. So let's move over to our weekly chart. As we can see here, on the weekly chart, the Gaussian channel upper band has acted as somewhat of a bearish trigger on the macro chart in terms of our top cycles. If we take a look at our 2014 top, we of course saw our top, and when we broke into the Gaussian channel, we saw a directional move through the Gaussian channel. We broke above and remained above the entire time until we broke back in, resulting in a correction yet again through the Gaussian channel. There was one instance where this did not play out, and that was of course the initial break into the channel right over here, where we just dipped our toes right under the channel in July 2021. This was most likely representative of deviation. Nevertheless, when we did officially break back below this level in December 2021, we saw a macro continuation through the channel. So it doesn't necessarily mean we're going to see 30-40% corrections under the lower band, but what it does suggest is generally when we break through the upper band on the macro, we generally see underneath the lower band. So we do run the risk of a correction again into that mid to low $50,000 region, which lines up with this critical level of horizontal support and that 200 moving average right over here if we lose this on the weekly chart. So you can see that the upcoming weekly candle is going to be very important in determining whether or not we hold on to or whether or not we lose the 50 EMA and the Gaussian channel upper band. Let's now move over to the 3-day chart. I want to take a look at two important levels here on the 3-day chart. Number one is going to be the Ichimoku cloud, and number two is going to be the Gaussian channel. So let's just rewind this chart here to go to the 3-day Ichimoku cloud chart. So I want to bring up an indicator which not a lot of people look at, but is of utmost significance. Now, this indicator here is going to be the Ichimoku cloud indicator. Specifically, we have turned off a bunch of stuff. If you want to bring up the same one we have here, we've turned off our conversion line, our lagging span, and we've just turned off the leading spans just for visual effect. Again, the leading A and leading B are simply just making up the upper and lower portions of the cloud, so we don't necessarily need that on the chart. We have got our cloud itself, and we have got the baseline still active. Now, as we can see, we have got 6 days remaining. So this is a very early time to be talking about this indicator. It may not come to fruition, what I'm going to be discussing, but we need to talk about it anyway, even though there's 6 days remaining until we get confirmation. This is going to be the loss of the baseline of the Ichimoku cloud on the 2-week chart over here. If we take a look at the breakdown of the baseline in prior cycles, in similar instances where we saw breakdowns of the Gaussian channel weekly, which was one over here, the weekly Gaussian channel was lost here, the weekly Gaussian channel was lost over here, and the weekly Gaussian channel was lost over here, we can see that the break of these levels in history resulted in macro continuations downward. So we can see in all three instances, 3 of 3, we saw macro continuations downwards. And if we're looking at where the price action is here again, the weekly Gaussian channel is sitting exactly on that 2-week baseline. So again, if we saw the weekly close below the 50 EMA, we saw the weekly close above the Gaussian channel upper band, we will also see the 2-week close below the baseline of the Ichimoku cloud, which could result in a correction toward the downside, something we have to be aware of. So will this happen? It's impossible to tell you 6 days out. We need to see that close. We need to see the confirmation. But it is something that may occur. It is something that is potentially possible, so we need to be aware of this as a possibility, as historically this has been pretty accurate. So we're watching that as a potential scenario. If we move to the 3-day chart now here, we do have some critical levels of support and resistance we are watching. First and foremost, if we take a look here at the Ichimoku cloud on the 3-day, we have noticed we've essentially remained above the lower band of the cloud this entire way. We deviated below temporarily here, broke back above it, and we've remained above the entire time. We are sitting underneath it now. This is sitting around 81,000. 81,000 is now going to be a level of resistance. Ideally, we want to see the price break back into 81,000 to facilitate a continuation back upwards and through the clouds. If we do not see that, we may continue down toward the lower side, which is confirmed by those weekly charts. And of course, we also do have the Gaussian channel indicator here on the 3-day chart. We can also see we have dropped back below the Gaussian channel on the 3-day as represented by this candle over here. Again, while we sit underneath the Gaussian channel, the potential for this trend to flip downward is also there. So a lot does rest. As you can tell, if you're adding the pieces of the puzzle up as we've been talking, a hell of a lot is resting on this exact moment here. This particular moment, this crossover point around 77,800, the 50 EMA and the upper band of the Gaussian channel on the weekly. This is going to be the trigger point for the continuation downward or a reversal now, okay? As we were talking about on the short term for many weeks, as we were in this consolidation, the trigger for the next leg down was the loss of 80,000. We saw that. We saw an 8% correction from that. Now the trigger for this to continue even lower is going to be the 50 EMA and the Gaussian channel upper band. So we're not taking so much of a bullish stance over here, but we're taking more of a short-term neutral stance while the price decides how it wants to move between these levels. Let's now talk about what needs to happen for Bitcoin to properly reverse. As every time we see large corrections, we see some degree of mean reversion, people begin to get very, very bullish before we get any confirmation. Green candles are not always bullish, red candles are not always bearish. Let's talk about what needs to happen for the buyers to get back in. The same goes as before, and this will remain a fact throughout the price action no matter what happens. For us to be confident in reversals as momentum traders, we need momentum shifts. We need to see the RSI break through this downtrend to facilitate a positive momentum shift and increase the probability of a break of 89,000. Until this occurs, we are going to be not expecting directional moves past 89,000, okay? So if we want to see a directional move past 89,000 and continuations into highs, confirming this is the bottom, we need to see that RSI breakout. We need to see the positive momentum shift. Until that happens, the potential for the price to drop is still on the cards, okay? It's still on the cards. But I guess what I'm trying to say now is what we can see is the price action has dropped a hell of a lot. Both Bitcoin and the S&P 500 dropped a hell of a lot over here, okay? A lot of people are going to now be aping into max shorts, expecting the price to immediately correct much lower, and I guess a lot of people are late to this trend. So just as here wasn't the time to ape in, I don't believe here is a time to be taking max shorts. I think it is best to wait to watch these breakdowns to get confirmation Bitcoin is going to go lower, to get confirmation the rest of the market is going to be lower. Now is actually a time to be scaling into some profit taking from the positions, the short positions we've been having over here, and potentially opening some short-term shorts based on these horizontal levels of resistance and support we have developing. Let's quickly talk about this over here. I want to bring this chart up over here. Well, not a chart. This is a post that was seen by Bloomberg, and I don't like to go over news too much because I think for the most part news is just a way that funds, banks, and companies use to manipulate the public. But we can see the discrepancy, and I can show you visually how they go ahead and try to sway the public's opinion. December 2024, guys. Bloomberg analyst predicts, a top analyst, mind you, predicts $25,000 for Ethereum. December 2024, $25,000 for Ethereum. December 2024. Let's just take a look at December 3, 2024. That was around about this period over here, around 94,000. Now, Ethereum at the time was around $4,000. It has dropped to 1,400 now. Just 24 hours ago, not even 24 hours ago, 3 hours ago. I would assume the same analyst, okay, that's an assumption, it may not be, but still, a Bloomberg analyst predicts Bitcoin could sink to 10,000. Do you see how they use these headlines to potentially sway the opinion of people in the market? I would put very, very little weight to these headlines. They almost mean absolutely nothing. They're just like someone in the comment section saying Bitcoin is going on 400,000. Without justification and logical justification, mind you, these opinions really don't mean much. You need to block out the noise and focus on the charts, trade level by level, ignoring these crazy opinions. 25K was a crazy opinion. 10,000 is just as unrealistic in my opinion. I don't believe we'll ever see $10,000 again. I'm not going to make bets on it because we never can predict the future, but the probability of seeing $10,000 again is ridiculously low. It is almost minuscule in my opinion. So I think this is a wild headline. I think the person knows this is a wild headline. And I think the purpose of it is to instill a degree of emotion and fear in the market after we've already seen a large pull down. So let's take a look at the short term, guys. And I want to wrap this video up pretty soon, so I'm not going to spend too much longer on it. Again, short term, simple, very, very simple. Prior support becomes future resistance. So As we approach this resistance after mean reversion, rejections to set in are possible. It is simple as that. If we break it back above this level of resistance, well, then we can talk about potential continuations, as this will be then marked as deviation, and that will be the bullish case scenario. Until then, all we are doing is we're rallying back into resistance after mass liquidations, so I'd be very cautious about taking longs over here. I'd be more or less looking for, higher risk, tighter stop loss shorts moving into that resistance. Again, you have to take a degree of risk in the market. No decision comes without any risk over here. So it's something we need to be considering as we approach this resistance. But again, prior support becomes future resistance. We're watching for breakdowns. If we want confirmation of these breakdowns, we do have an uptrend here on the 30-minute. Well, we have it on all time frames, so let's just take a look at it on the 30-minute over here. With the 30-minute uptrend, if we break this uptrending trend line, well, then we are correcting back to fill these levels over here at around 76,000. As you can already see, we are seeing this print. This is a sign of weakening bullish momentum. It doesn't necessarily always predict reversals. You can see here, we predicted this reversal here. You can see here, predicted this reversal here. But there's instances where it doesn't, because it doesn't confirm momentum shifts. It simply suggests that there is a degree of weakness or a degree of strength in regards to the momentum in the current direction. In this instance, this would represent momentum is positive, but it is beginning to weaken. So we are seeing these degrees of short-term pullbacks where rejections could develop from this region, okay? Let's go ahead and wrap up the video with one more chart, and that is going to be the total market cap and total altcoin market cap. Total market cap here, not looking fantastic. Total altcoin market cap nearly actually retested our target. If you'll remember back to maybe a few weeks ago, we were discussing a target at the change of character. We came very, very close. So that was a 650 billion. We dropped down to around 660 billion. So it'd be pretty annoying if that was the bottom there. But again, still watching for liquidity to be grabbed, still hoping we do reach that change of character level for potential deviations and continuations. But if we lose that level, well, then we're going to 200 moving average. So I'm going to wrap the video up here, guys. Have a fantastic day. Catch you guys in our next video on Thursday. Have a great week, and I'll see you then.